Hello everyone. Today we're going to be talking about Tether, which is a stablecoin. It's a cryptocurrency project that allows you to trade mostly US dollars on various blockchains. We'll get into the details of which blockchains, mainly Ethereum, on the Ethereum blockchain. It allows you to, each Tether coin is tied to, theoretically it's tied to the value of it never changed. So when you hear a stablecoin, the value is pegged to something, so it's always 1-to-1. So in this case, it's pegged to the US dollar, which means that the value will always match the US dollar. So you'll always be able to buy it for $1 and always be able to sell it for $1 is the goal. And there's a Bloomberg piece that I read in Matt Levine's Money Stuff article that he linked to one of his colleagues at Bloomberg, Zeke Fo, I believe is how you pronounce his name, which in the article is titled "Anyone Seen Tether's Billions?" So Tether's been around for a while. It's kind of it's the most popular stablecoin. It's been around for a while and it's popularized the movement. But for years, people have been saying, do they just print these coins, or do they actually have? How are they backed? Like, can I trust that I'll always be able to redeem for $1? Do they actually have? Right now, there's $69 billion worth of the U.S. Tether coin. Do they actually have $69 billion in assets, or do they have $30 billion and they've messed up some investments and it's a scary situation? So I've always looked at their website's always been dog shit. I've always been skeptical of this project, and I'm not the only one. Many people have been skeptical of it because it's just always done shady stuff. They were never very clear. Their audit information on their books is always unclear. So stablecoins are absolutely important for in the cryptocurrency space. Listen, if I want to send someone $10, I want to send them $10. And if I send them some Ether, or Bitcoin, the price of the value, that could change. So it's very important. It's a very important thing, and it's very important that it's trustworthy. So in this case, never really trust it, but there's a piece, some solid journalism here, which just shows that, to put it simply, Tether's a house of cards, and I would not trust it. I would not put any of my own money into it. We'll talk about USDC, which I am a big fan of, and I think they're a lot more transparent and I think a lot more trustworthy. That's the hot take. So thanks for joining. I'm Dick Lucas. This is the No Gradient podcast. You can find it wherever podcasts are available. Just search No Gradient and try to release a couple episodes a week going forward on specific topics. You can find us on YouTube. Me on YouTube. I always link to the YouTube channel and all the show notes for the podcast. Also can find me on Twitter and Instagram, Dick C. Lucas. You can find new episodes there, and I'll always post like the first 90 seconds of an episode to see, just so you see if you want, if it's something you're interested in. I give a quick rundown. Because I don't expect everyone to listen to every episode, frankly, because I think some episodes you're just not going to be interested in the topic, or don't care, already know enough, and don't care about my 2 cents, etc. So I'm experimenting with doing episodes on specific topics. Anyway, let's go into this. Let's go into this story. There's some epic quotes here. So the team behind Tether. I mean, that's always the first thing. If you don't trust a project, well, look at the team behind it. So the team features a former child actor who missed a penalty shot in the Mighty Ducks. The only I believe the only bank the only bank that's audited their stuff, or the only bank that's willing to work with them, is Deltec Bank and Trust in the Bahamas, and the creator of that bank is the co-creator of the cartoon Inspector Gadget. The chief executive officer, J.L. Vandervelde, is a Dutchman who lives in Hong Kong and seems to have never given an interview or spoken at a conference. The chief financial officer is Giancarlo Devasini, a former plastic surgeon from Italy who was once described on Tether's website as the founder of a successful electronics business, but the only reference to any of his electronics business is him selling pirated Microsoft software. And his Telegram username is Merlin the Wizard. I'm not going to dog the guy for the username, but it's like this is a cast of characters. Now I believe in giving people a chance, but it's like, dude, when you're talking about something as fundamental as value, value, persistence, value storage, and stable coins, you want to be able to trust it. I want old crusty boomers that have been banking for 40 years to be running my stable coin. Not exactly, but you get my point. I don't want some new hotshot band of crusty characters that, no one's really seen their work in financial space before doing this thing. So it's already sketchy at the outset. And I've always thought, even just looking at the website, I'm like, who built this, bro? And for some reason, they're the most popular stablecoin, $69 billion in assets. And we'll go into a little bit more detail on that and which blockchains they live on, and we'll also compare it to USDC. But let's start with this. I want to color the other things I'm going to share about Tether with what they say. I'm going to pull right from their website what they say on there, and this has been on their website for a while, at least past few years, and because I've seen their transparency statement, I've read it, and here's what it says: every Tether token is always 100% backed by our reserves, which to say reserves, that means absolutely nothing, because what reserves? So, which includes traditional currency and cash equivalents, and from time to time may include other assets and receivables from loans made by Tether to third parties, which may include affiliated entities, collectively reserves. Every Tether token is also 1-to-1 pegged to the dollar, so one USDT token is always valued by Tether at 1 USD, which means you can go to Tether and you can always sell them a Tether and they'll give you back $1, and you can always buy it Tether for $1. So let's say that part again. And from time to time may include other assets and receivables from loans made by Tether to third parties. That sounds a little sketchy. So let's talk about some of the interesting tidbits that Zeke, the writer of this Bloomberg piece, of what they as I said, the title is "Anyone Seen Tether's Billions?" So his goal was to search for, okay, where are they storing these quote unquote reserves? So he found that billions of dollars of short-term loans to large Chinese companies, something money market funds avoid, and a money market fund is a way to a very low risk place to put your money that gives you a little bit of interest. And that was before one of the country's largest property developers, China Evergrande Group, started to collapse. So honestly, having a stablecoin backed by Chinese companies or any part of the Chinese economy is, in my opinion, an absolute very high risk endeavor. Okay, there's also this tidbit. They had lent billions of dollars to other crypto companies. So Tether is loaning money to other cryptocurrency companies. This is a high risk endeavor. Anytime you're loaning money out to a crypto, especially a crypto company, no less, which is already a super risky space. One of them is Celsius Network Ltd, a giant quasi-bank for cryptocurrency investors. Its founder, Alex Machinsky, who knows, told me. He said he pays an interest rate of 5 to 6% on $1 billion in loans from Tether. So Bitcoin, people give Tether Bitcoin. So let's say they give $2, we don't know the exact amount, but let's say they give $2 of Bitcoin, and then Tether will give them $1 in USD. So that means that the value of Bitcoin would have to be cut in half for those reserves to be in jeopardy. Now, it's probably a higher, honestly, if Bitcoin could go super, super low. I mean, who knows? So it's just very, very, having your quote unquote stable coin be tied to Bitcoin is an absolute, is an absolute nightmare. And it's also interesting that it is, and Matt Levine talks about this in his piece. I highly recommend people subscribe to his newsletter, Money Stuff. He talks about this. Only in the financial world, it's such a beautiful thing that you can wrap a Bitcoin. It's this volatile asset, but you can create something stable out of it. So you can, if you have reserves, if someone gives you $10 worth of Bitcoin, you give them $1 US dollar. The likelihood that it's going to drop by, it's going to decrease in value that much to make it so it's that $1 becomes in jeopardy is unlikely. But who knows? It's Bitcoin. I tell everyone, don't invest any money in this space that you're willing to lose. Don't invest so much that you check the price every day, because at that point we've lost the point. Well, then you're just spending energy on checking the price, and live your life, bro. Okay, another thing. Hogner, Tether's lawyer, declined to say whether Tether had other Chinese commercial paper. He said the vast majority of its commercial paper has high grades from credit rating firms, and that its secured loans are low risk because borrowers have to put up Bitcoin that's worth more than what they borrow. All Tether tokens are fully backed, he said. There's a letter from an accounting firm. This was from, I think, a couple years ago. So if you want to do this right, Tether, you need to have a third party look at your books and release reports. This is what the Center Foundation does, which is a partnership between Circle and Coinbase, which created USDC. Every month they give an assessment of what it's backed by. So that's what you need to do. So there's something that says they have $30 billion of its dollar holdings are invested in commercial paper, short-term loans to corporations. That would make Tether the 7th largest holder of such debt, right up there with Charles Schwab and Vanguard Group. So some of the Wall Street Zeke, the journalist that wrote this piece, canvassed some of the Wall Street traders, and it's a small world, this commercial paper world. So if someone's holding $30 billion worth, you're going to know them. And no one heard of Tether buying anything. Deborah Cunningham, who's the chief investment officer at Federated Hermes, knowledgeable in the space said, I ain't never heard of Tether. Well, if they have $30 billion worth of commercial paper, so they claim from a couple years ago, you don't make trades that big in that small space without people noticing. So no one noticed. So it's another sketchy thing. Tether's former banker in Puerto Rico, John Betts, which is a hilarious name, John Betts. You're betting big on this one, beasties. Implored the plastic surgeon CFO to be careful. Rather than 1% interest, he wanted to make bigger bets. So the CFO, this plastic surgeon dude, Italian plastic surgeon, wanted to, rather than put the reserves in super low risk, low interest bearing assets, he wanted to take more risk. And John Betts was saying this isn't fair, because if shit hits the fan and our investments go belly up, who's gonna be holding the bag? The people that have their money in Tether, they're gonna get screwed. And guess what? If these investments do work out, Tether customers don't get compensated, so they get all the downside, none of the upside. And it's interesting because Matt Levine ends his piece with, it seems crazy to have a stablecoin backed by Bitcoin, but in 5 years that could be unremarkable. It could be, that's just how banking works. There's a lot of things in the financial world that are like housing, for example. A lot of stuff is backed by mortgage-backed securities, or rather, securities are backed by mortgages. And this is relatively, a safe asset, or probably safer now after 08, 09 when the whole thing went belly up. But it's it's just an interesting way. Matt Levine, I like him. He's skeptical of cryptocurrency, but he approaches it. I always like listening to people that are skeptical of it, especially people that come from the old world. He was a Goldman Sachs trader. Now he worked at Goldman Sachs. Now he's he wasn't a trader really per se. He worked for their investment bank department or sector of the company. So super interesting. So a few other things. So in February 21st, 2021, the New York Attorney General settled with Tether, and Tether didn't have to admit any wrongdoing because they made an $850 million loan to Bitfinex. This fact is not this is not under dispute. Not even Tether disputes it. So $850 million to an exchange in a cryptocurrency space, that's where you're putting the reserves. That's how the hell people still believe Tether is viable. It blows my mind. I think on a lot of exchanges you can't put US dollars, so you have to use Tether, and Tether has been shown to be stable. But I really think the whole thing is going to go belly up. So the Tether stablecoin is not only on Ethereum, it's also on Omni, Tron, Algorand, Liquid, and Solana. They also have $20 million worth of yuan, $85,000 worth of a gold peg. So they have actually a token that's pegged to actual real world gold. Then they have $69 million worth of euros, which is just an interesting. 69 million worth of euros and 69 billion worth of US dollars. So it's not just US dollar that they have reserves for. They have other stable coins as well. So the Center Foundation was started by Coinbase and Circle, which USDC, I'm a big fan of USDC. It's about half as popular. It's about half as popular as Tether, but I trust it a hell of a lot more. It's backed by Circle and Coinbase. Like I said, they've created the Center Foundation, and they release from Grant Thornton, which is an accounting firm. They release every month. They release a transparency report. So right as of the last one, they have 92% of the reserves are in cash equivalents, 1% are in corporate bonds, 5% are in Yankee CDs, certificate deposit accounts, and 2% are in commercial paper. Commercial paper just means shorter maturity than bonds typically. It's short-term debt, so it's lower risk. And also, what's interesting about the Center Foundation is anyone can become an issuer of USDC. You have to fulfill a bunch of requirements, but they didn't just create a stablecoin. They created a framework that will also be able to use to create other stablecoins in the future. I remember reading their white paper. It was not just about USDC. I think that's the only one they have right now. I don't think they have a stable euro or anything. It's only USD right now, but they have a framework to create stablecoins for any number of currencies, and I think that's going to be their goal going forward. But it's an interesting, very interesting project. It's not just about those two companies. Theoretically, other people could come on, and assuming they fulfill the requirements, could come issue USDC. And they're also on Ethereum, Algorand, Solana, Stellar, and Tron. So that's a very interesting project. So stablecoins are a very interesting, and necessary part of the cryptocurrency ecosystem. I think it's very necessary for it to be successful because the value. You need to be able to, if I'm going to send someone money or if I'm going to do any type of transaction, I want it to be where the value matters, and I'm going to want to do something with a stable coin. The value of Ether changes, the value of Bitcoin changes. It's just an interesting necessary kind of core primitive that a cryptocurrency ecosystem, in my opinion, needs to have. And USDC, there's about $30 billion, and I think there's a little over that $33 billion worth of it, and $1.2 trillion has been transacted with it, which means gone back and forth between accounts, which is very, very interesting. Now, I should also say with USDC, we've talked about this before, it's not as secure. They have the ability, the Center Foundation has the ability to blacklist addresses, meaning if you have a wallet with USDC, they can blacklist your wallet and boom, you can't spend it. You can't, if you have Ether, no one can blacklist your wallet. So it's not as secure in that sense, but they have to do it. They have to do it because, if criminals use it, they need to be able to freeze their funds. This is just the reality of the world we live in, which we should live in that reality. Criminals should not be able to use USDC freely, and senators' hands shouldn't be just tied so they can't react to it. So, again, there's trade-offs to everything. What's interesting to me is I'm surprised that Bitcoin allows, it's not a smart contract blockchain, but they have a scripting language that allows you to build some, for lack of better phrasing, simple applications on the Bitcoin network. I mean, that's how Layer 2 works. I'm surprised there's not a stablecoin on the Bitcoin network because the logic isn't that crazy. It's not that crazy. A stablecoin. It's not like a super arcade. It's not like something like compound finance, or you're not building a game. It's a pretty limited, logical, money in, money out. There's not a lot going on there. So I'm surprised there's not a stablecoin that's on the Bitcoin network. I think that'd be super interesting because Bitcoin is the most secure, and I'm sure you could probably build it on that. I don't know. Maybe there's a good reason for that. But anyway, Tether, careful. It's crazy it's this popular, but it's interesting Fukin space. Interesting space. I actually have some USDC that I'm just a little bit on compound finance that's earning interest because I'm loaning it out on compound finance, which is another borrowing and lending platform on Ethereum, which is just so. Again, I use these things. If you're interested, use them. Right now, the fees on Ethereum are high, so it's a little tough. But at least get to the point where before you make the transaction, that'll at least show you something. And like I said, with Mir, that publishing tool a few episodes back, you could use the blockchain, connect your wallet without having to pay any transaction fees, which are epic. Which is an epic thing. Anyway, thank you so much for joining. This was a quick one, maybe my quickest episode yet. Dick Lucas, No Gradient Podcast. Search No Gradient wherever podcasts are available. Email me, dick@nogradient.com. Any feedback, questions, comments, concerns, hit me up. Dick C. Lucas on Twitter and Instagram. And thanks so much for joining. This was fun, ladies and gentlemen. Bye.